Thank you, Mark, and a big hello from London. We've had an interesting series of technical actions seen at the end of last week, which have, for the most part, left me scratching my head. To start with, we had a weekly key reversal up in euro sterling last week. One could say the move was a bit of surprise, coming as it did with the market having recently formed an apparent head and shoulders top, typically a bearish formation. Plus, prices were stuck even after the formation of the head and shoulders top within the quagmire of moving averages that stretched from just above the neckline, currently at 84.07, up to the declining short-medium moving average, currently at 84.96. Nevertheless, it was a true weekly key reversal up. But we've not seen any follow-through higher this week. All that we have seen has been a decline back into the main body of last week's action, and a test down today to the neckline, again still within the main body of last week's action. This neckline, interestingly, has held so far. Thus, it seems the market is undecided by last week's bullish action, as well as by the recent head and shoulders top. Next, we had a weekly key reversal down in Bitcoin last week. To give some background, I was asked a few months ago what the situation looked like in Bitcoin, and I coined the phrase, sorry for the pun, I coined the phrase at the time that it looked like 4 steps down and 1 step up. Well, last week was an example of just that, as the action to form the weekly key reversal and down took out all the bullish incentive of the market and the bullish construction of not only the month of August, but also negated the second half of July's bullish move. The trigger for the move lower was the market tangling with the declining short-medium moving average, currently 23.337. This was the first time it had done so since mid-April. Interestingly, the market fought shy of testing all the way down to the late June-based uptrend, currently at 19.973, both late last week and this week also. Now, we saw a hanging man pattern on Monday, usually a bullish pattern, followed by a daily key reversal up yesterday. However, today has seen no follow-through higher. Indeed, prices had dipped a little. It seems this market can't make up its mind whether to tackle the uptrend below or the moving average above. The final 3 are currency pairs. There has been a limited, if positive, follow-on higher to the weekly key reversal up in the US dollar Egyptian pound 1-year NDF. The immediate reaction was a very contrary one, with a daily key reversal down on Monday, if only just, especially considering last week made a new all-time high. Today's action is limited, but is indicative higher and should be the highest open we've ever seen. Spot US dollar Colombian peso also has had some issues. After making a weekly key reversal up last week, if only just, there was a small follow-on higher on Monday, which was countered yesterday. The move lower was not excessive, but it was enough to have questions asked about the direction of this week. Finally, Euro-Polish zloty, I should say, saw a good-looking weekly key reversal up last week, based as it was on the market testing down to both the medium moving average, currently at 468.31, and the long moving average, currently 465.17 during last week. Now, both the moving averages were breached, but they held on a closing basis and were not broken, with a resultant move higher, which has carried on into this week. Looking above, we have the middle time, currently 482.30 of the late May to mid-August bullish Andrews picture, which looks quite interesting as a dynamically higher moving resistance point. I'm always happy to answer any direct questions with anyone who's interested. And with that, I'll finish this section from London. I hope you found these comments useful.